Today I'm going to talk to you about how to guarantee your company is profitable. Let's dive into it. Scott Duke, this is the Happy Dealmaker channel, and on this channel we empower small business entrepreneurs to build companies that are sellable. So if that sounds like something that would be valuable to you, don't forget, like and subscribe below. Now this I ran across in a book called Profit First by Mike Michalowicz, and I'll put his book up here and a link to it below in the description, and it's painfully simple. And I'm kind of choked that I didn't come across this sooner in my life, but this is the technique that he talks about in the book. And if you want to dive deeper, I suggest go get the book. I actually first came across it on audio. It's a good book on audio, but you can also buy it and read it. Anyhow, this is the deal. It's super simple. So instead of having one business account that your general operating account, your bank account that everything goes in and out of, you create 3 accounts. So you just go into your bank and you say, I'd like to set up 2 more accounts. They can be checking, saving, doesn't matter. But then you have 3 accounts associated with your business. And the first account is your general operating account. So that's all your ins and outs that, you have your expenses get paid out of there, your revenue comes into there. But the other 2 accounts you set up, and one is set up specifically for holding your taxes, the liabilities that are associated with tax. And the other one's set up for purely for profit. So the way this works is you decide as an entrepreneur what you want the profit of your business to be. So that could be, 10%, 15%, 20%, 30%, whatever you feel is going to, work for you and be right for your industry. And the second you get that money comes into your general operating account and you cash a check and in it goes to the general operating account, before you do anything with that money, it now deviates and kind of divides out into these other accounts. So right off the top, you take your 30%, if that's what you decide you want your profit to be, and you move that money over to the profit account. And then you also take whatever your taxes are, your provincial or state or federal taxes, you take the taxes that are owing on that money that you just earned and you toss them into a tax account. And now everything that's left in your general operating account is what is money that you can safely operate your business on. And the magic to this is what actually ends up happening is you shift that money out and it sits in these other accounts and it just kind of hangs out there and it slowly starts to build. Your tax account starts to build up, your profit account starts to build up, and your company adapts. It seems to naturally adapt to be able to operate on the amount of funds that are in that general operating account. And we know as entrepreneurs, this is what we do anyway. We put the money into the bank account, we look at our bank account, and that's kind of our metric of what we have available to operate our business with. Well, now that profit isn't sitting there anymore, it's in a whole new account, and you end up operating on much less, and your company naturally ends up being more efficient. And the only thing you did was open 2 new bank accounts, which basically cost you nothing. Maybe it's $5 a month to have those extra 2 accounts open. And now you know that everything that's in those accounts is you're covered for tax, and you also have your profits. At the end of the year, that nice fat profit account is sitting there, and that's your money. So hopefully that's helpful to increase the profitability of your business, which at the end of the day increases the value of it and makes it easier to sell. If this video was valuable to you, don't forget, like and subscribe. I release a video like this every Tuesday and Thursday. All right, thanks again for tuning in, and remember, every business is sellable.